All right, good afternoon then everyone, as we're at the end of another week of trading on a pretty interesting week. Hopefully you managed to make some cash for yourself off CPI. Managed to get that right over the videos over the course of this week. Fairly simple one well, I mean, in hindsight, a very simple one. If I had gone the other way, well, then it obviously was very simple. But CPI, I'm not going to talk about much to begin the week, as there wasn't much to begin the week. But we did get these CPI prints from the US that beat consensus across the board. Inflation still a little bit sticky. No surprise for all the reasons that we mentioned earlier on the week. I'm not going to go through them all individually. Please just check out recent videos over the course of the last few days, breaking down those breaking down the inflation print. Done that multiple times before. Doing it again. Bit of a waste of my time, but predictable ahead of time. The aftermath for that is, what does that mean then going forward? I think that puts the nail in the coffin for an interest rate cut from June. What that then does for the rest of the year is Neil Kashkari right from last week saying we may not get any. Is Bostich right from the other day saying that we may only get one? Markets have reduced their pricing down to 2 cuts for this year. There are a number of investment banks now changing their thought process to 1 cut. I'm gonna put my neck on the line and still say no cuts. But anyway, we'll cross that bridge a little bit later on in the year. But certainly, I think puts the nail in the coffin for an interest rate cut in June. That leaves us then 4 interest rate decisions through the rest of the year after we get through the next two, and not really a situation where they're going to get three. Definitely not. So I think the Fed are going to have to change their tune when we do have them out on the 1st of May. But until then, you've got to go and line these moves. I mean, you can see. I was going to talk about the Aussie there for a second, but you can see across the board, Aussie, Kiwi, Euro, and Sterling all lower, smashing lower on Wednesday. PPI got a bit tricky for it yesterday. ECB kind of confirmed interest rate cuts in June, but we'll get back to that in a minute. We see Aussie, Kiwi, Euro, and Sterling. Then dollar Swiss. Dollar Swiss not managing to have the gains of the others, which is maybe a little bit surprising, but and dollar CAD continues to push higher. So the 5 of them pushing higher, absolutely no surprise. Dollar yen pushing lower while the rest of these push higher. This market seemingly reluctant to push dollar yen that much further higher. Hasn't managed to have the same level of gains as the rest. Obviously, understandably, the fact that we breached that 152 level, haven't had any intervention just yet. Again, they're going to want to sell straight back into those CPI prints. So probably be prudent from them. Is they have the goalpost been moved to 159, 155, should I say? That's a bit of chatter that has gone on that I have talked about in recent videos. So that is something we can keep an eye on. Dollar yen up at these levels, but euro dollar especially, I think, is a sell on rallies. Any rallies, I think you got to sell on euro dollar. Big support was breached at 107 today earlier on, and that looks set to continue its move lower. How far lower that goes is another question, but it seems as if the Fed and the ECB are, certainly from my point of view and a lot of other market participants, are now on a diverging path on monetary policy. The ECB opening the door to an interest rate cut in June in yesterday's meeting. That then means they're going to start cutting, and the Fed don't have the luxury of being able to start cutting. The higher for longer narrative is going to stick. Higher for longer, some market participants think we may get a hike. That would be a turn up of events, and that would probably send euro dollar somewhere towards parity, probably. But we'll cross that bridge when it comes to it. That's just a theory for now. For now, any rallies on euro dollar need to be sold, and I think any dips on the dollar really anywhere need to be bought. The Fed are not in the same position as the rest of these central banks. The rest of these central banks are going to be looking at cutting. Maybe not like the RBNZ, RBA, inflation still a little higher in those countries, but I think certainly euro dollar, cable, dollar Swiss, dollar CAD, oh well, these two are sell on rips. These are buy on dips for the two of them. Stock indexes just don't want to go lower, do they? I mean, they had massive downside yesterday, and then a 0.1% miss in PPI. They nearly reversed the whole move. And in terms of the S&P 500, the Nasdaq did reverse the whole move and then continue on higher. So, market's just looking for any sort of hope to cling on to that we are going to get these 3 cuts. I don't think we'll get them. Stock markets just don't want to go down. The US dollar is an easier trade. I mean, the currency's an easier trade at the best of times on these economic data prints, but if you think about stocks, I mean, okay, higher for longer interest rates, the economy is still performing well. To be fair, I mean, like stocks should probably reprice lower. It's now in a technical downtrend on like a 4-hour chart, but ultimately, at the end of the day, the economy is still performing well. So it's kind of like a bit of a football game, I think, at the minute. One team's gone 1-0 up in the first half, the other team's equalised and gone 1-1 in the second half, and I can justify a reason as why the S&P or why stocks don't want to sell off aggressively. I think in reality they probably should, but the economy's still performing well, and as long as the economy continues to perform well, certainly from a stock point of view, I don't think it matters about interest rates higher for longer. Certainly not for the time being. Anyway, if economic data continues to perform well, that's still positive for business conditions, and then stocks rally. Different scenario for the currency, but I think higher for long. Well, not I think higher for longer interest rates from the Fed do cause pretty simple upside on the US dollar. And then you got the economy performing well and higher for longer interest rates. That's just an easy long of the dollar. Yields, no surprise, then are higher in line with that. Oil is smashing higher at the minute, up $1.50 in the last hour or two, and that is ripping higher at the moment. Maybe I've missed something. I'll have to report back on that one, I think. But yeah, certainly that sort of aggression is not something that is that common. So yeah, let me get back on that one. But markets across the board, gold rallying higher. That makes no sense why gold continues to rally higher. Interest rates higher for longer. Bond yields have rallied. It doesn't really have much of an effect on gold. I mean, that kind of baffles me a little bit, but anyways, maybe it's to do with it being a hedge against inflation, but up all-time highs again in this most recent candle, up above 2,400. I struggle to wrap my head around gold at this present time, but anyways, I'll leave that one there and we'll focus on the other assets where clear US dollar strength, bit of equity weakness. Be interesting to see how markets close into the how markets trade into the close today, but some solid downside in the last kind of hour, and stock indexes. Maybe that's, something to do with Iranian retaliation, but again, we'll have to have a look at that, unfortunately. But Bank of Canada, Cliff Macklem opening the door to interest rate cuts in June. Again, dollar CAD seems a good buy on dips. We wanted to hold dollar CAD through CPI and then through the Bank of Canada. Fortunately, a bit of a trail stop loss, click this out, but traded up real tight, hoping that the Bank of Canada would just come out dovish and then that would push it higher. Got clipped out by a couple of pips, was annoying, and now that's continued on over 100 pips higher. But anyway, that's all right. It doesn't matter too much. You can always get back in, which is okay. But ECB opening the door to interest rate cuts in June. Bank of Canada opening the door to interest rate cuts in June. The Fed, if these inflation figures are anything to go off, certainly not going to get that in June. Whether we even get one this year is the question. Next week we'll cover next week. That's really the main focus of attention this week. Strong dollars gotta be the name of the game going forward, you would think. But anyways, have a good weekend, everyone. Get some rest and relaxation in, and yeah, been pretty good this week, or pretty good week this week for most people. So hope you are the same. Have a good weekend, then recharge the batteries, and I'll speak to you again next week.